Hi, welcome to the Market Alert for Tuesday, the 4th of September 2018. So, Friday's pound trading session. Market was sideways, waiting for the Labour Day weekend celebrations. You can see the market struggling at the DP level there. It did try to get through after coming back, after driving through to the downside. You can see the selling there. However, the market bounced, but eventually it had to move lower. There was no buying on the upside. And then eventually you see the selling there through the 200 bar moving average. And we're below the 50 and the 20 as well. And then prices move lower. And then we get news at 1:30. The market bounces and trades back up to the psychological level there of 130. I said before, 130, a very important level for the pound. This was then broken. And then on the overnight, the market gapped lower on bad news. And yesterday's session, you can see there the market trading up to the S1 level resistance, trading back below the average, already below the 200, which is there. You can see the black line, and also you'll see there below the DP as well. This is because the market gapped lower, which is why you're seeing the S1 resistance there, and then the market trading down towards the S3. And as I've said before, if the market trades down to the S3, it's likely to become sideways, more or less 100% of the time, and that's exactly what we see thereafter. So we had the sell signal there below the 129 level, and then prices traded sideways. So overnight prices are sitting on the low of yesterday's session. The markets managed to get above the 20 bar moving average there with some buying. You can see this in the green buying bars there, and it needs to drive higher if there's going to be any sort of bounce. So have a look at the daily to get an idea of the bigger picture there. You can see the market gapping lower on Sunday overnight session. We've got resistance up here at the 50 bar moving average. You can see the selling there as well with the red bar. And then prices back below the 129, back below the 76% retracement, and moving down towards the lower one at 128.30 there, and also 128 on the psychological level also. So back to the short side, barring a few bounces for the pound for yesterday. News today, we've got inflation report out in the UK, and also ISM manufacturing at 3 p.m. for the US, both high impact news items there. So what's the inflation report hearing? Obviously Carney's going to be being chatted to, I would have thought, at this time. Over to the Dow for Friday, the market moving to the upside. Let's just have a look at what it did in the pre-market session just to remind myself. Oh, it was fairly quiet, yeah, and then it moved to the upside. You can see the buying there again with the green professional buying bars. The market trading up to the DP level, hits a brick wall. You can see the volume there is adding to some selling pressure coming into the market. And then there's really nothing after this. Let me just put on the crosshairs. I just want to get a better look at this, just to see what happened in this area. So we've got the selling pressure there. We know the selling pressure, the market's come off the highs because of where the market closed. Prices are then ramped higher on low volume, and then we get some selling in this bar as well, because the volume is higher than the previous bar, and yet the range of the price bar is less, so that indicates there is some selling around. Prices attempt to move higher, fail to do so. So we've got the classic retracement there. It's not 76% just by observation alone at this level. it's 62, which you can see there. You've got the lower fib there, and if I just redraw that without extending it to the right, you will see the actual number then, just to make it clearer. There you go. I know it wasn't 76, it didn't look like it had come back enough, but nonetheless 62% and the DP level. Market then proceeds to move lower, and then once it breaks through the 200 bar moving average, we sail through the 50 and the 20 also. So that was for Friday, and then Sunday night the market's just sideways, and then yesterday morning you can see there at 9:35 prices break out to the upside, but yesterday's session the market closed in observation of the Labor Day celebrations, and the market just range bound, which is why it's not worth trading when the US is actually closed. So on the overnight the market has moved down into this area. We've got a bit of selling, and the buying's come back into this market, bringing prices back up, and currently we are above the DP and the 200 bar moving average at this moment, so giving a bit of a bullish indication there at the moment, as long as prices hold above this level. And finally in Bitcoin, it's still not dropping, but we're above the top of the average trading range, or the average true range as it's called. The market breaking through the 7144. We've drawn in another trend line there to see where the sharpness of this increases to the upside, and at the moment we can see that there's quite a sharp move to the upside and a sort of exhaustion as well. And I think if you were to throw on something like the stochastic, you can see that this too is overbought. So this market is due for a bit of a correction back to the downside, and also you've got the 200 bar moving average there as well, but certainly the short side favored more going forward because it needs to correct here. Okay, that's it for this one. That brings us up to speed over the weekend and Friday's trading session. If there's anything to report, I will let you know, but other than that, as ever, thanks for watching. See you in the next one.